Can bailouts really do good for the economy? Can printing money out of thin air to buy mortgage backed securities have a positive impact on the economy? Can doing the same thing over and over possibly provide a different result? It seems like goldfish walk amongst us. Short memories are in abundance, and failure is inevitable. You came here for the truth, so let me unveil that for you. I'm asking the question, will helicopter money save us? That's the next step. We are at the point here where we have done everything from the previous instances in full force today. The Federal Reserve has gone beyond that. The government is providing their TARP type bailouts. They're doing everything. They're going pedal to the metal. The next step is helicopter money, essentially dropping it from the skies on everyone below. They are issuing a check to each and every person. There's a lot of fine print there, but what they're trying to do is stimulate the economy. The deficits are piling up, the debt is piling up, average individuals are really being hurt by what's going on. A shutdown in the economy has its effects, not just immediately, but of course, a prolonged impact. I want to get into some information today that is extremely important for what we are seeing in 2020 and will persist throughout the year and beyond. You don't have to worry because Fed's Bullard says that the US economy is not in free fall despite 32% unemployment projection. Yes, this will be the most severe unemployment the United States has ever seen, but the economy is not in free fall. If you read the article here, he's basically suggesting that the economy is incredibly strong, everything is totally fine, but of course, this is all temporary. At the bottom, the uptake on the unemployment insurance program is a good thing, check this out, because it means you're getting the transfers to the people that are being disrupted by this shutdown. I thought it was interesting because they're able to reframe just about anything today, and this is certainly one to put up on the wall of shame. Speaking of the Fed, you can see the total outstanding repos and total T-bill holdings, which have increased dramatically over the past several months. While they have begun to taper the amount they print on a daily basis, it is obvious to anybody watching that they are expanding their balance sheet at a rate we have never seen before in history. This article here is basically talking about how these different companies are dealing with their current issues, their revenue, their profits being shut down for a period of time. And they also start talking about their stock buybacks. Hilton, with a current market value of $16 billion, has spent $4 billion over the past 3 years on share buybacks. American Airlines purchased nearly $12 billion of shares since 2015 on a market cap that sits at only $4.3 billion. Calculated risks at airlines, hotels, and casinos have both contributed to the growth in operating margins, but also put them at greater risk should the economy shift down dramatically. As I have said many times before, when there is a bubble, it really doesn't matter what actually pops it. The bigger the bubble is, the more damage that will occur. In the past 10 years, as interest rates have fallen to record lows, businesses have been incentivized to use the cheap money to expand. This is something we've covered on the channel many times before. I know you're aware of it, but you have to think about it as you make your preparations, as you make your investments, as you see the news on a daily basis. The jobs numbers have been so bad that even the good news is bad news. A rise in hourly earnings came largely because layoffs were concentrated in lower earning jobs. That is not good, but of course at this time, 10 million workers just got kicked to the side of the road. Now don't worry because it's temporary, but we'll see what the actual situation entails in the next few weeks, maybe in the next few months. My guess is that for a lot of the businesses, they'll bring them back slowly. So you get 20% of the workforce back, then another 20, and so on. The V-shaped recovery just seems a little bit ridiculous to me. With enough money printing, of course, that can happen in the stock market, but the actual economy, I just don't know why they would say something like that. Ford expects talks with the US on cash for clunkers-like stimulus. Ford would like the US government to sponsor an automotive stimulus program to help the industry get back on its feet. We're talking about cash for clunkers. You remember what happened last time around? It was terrible. There was so many things wrong with this program, and now they want a volume 2, a version 2 of something so bad, and we have to repeat that again. But of course, it's got nothing to do with the average person getting them into new vehicles, making them feel good about the situation. No, it's to get the businesses and their corporate profits to make sure that they are all happy. This was an interview with Jim Paulson, and he had some ridiculous thing to say. I wanted to show it to you. We had the Roaring 20s, and during that period, people got over their skies. The Depression started in some regard to correct the excesses that built up over that period. But this is the best part, and that has not happened today at all. Now think about this for a second. I just have to step back. I just gotta prepare myself. What a statement. That's unbelievable. Truly unbelievable to come out in front of the public and say something like this. What's he thinking? What's he thinking when he says something so unbelievably ridiculous? Okay. What we're looking at today is the biggest bubble ever. It was bigger than the Roaring 20s. It was bigger than what we saw in the 80s, in the 90s, in the 2000s with the housing bubble and the derivatives bubble. We've gone beyond that. Now, does it mean that if you look at the savings rates, which he points out in this interview, that they have actually gone up slightly? Well, what kind of timeline are we looking at? Because people don't save their money today. And why is that the case? Because interest rates have dropped so low. There's no incentive for them to save. Instead, they have to spend. They put that into an investment, hopefully, or more likely, they're just spending the money because they're not going to make anything from it. You have people today, they're not sophisticated in general. The average person doesn't know about that. They're either going to keep it in their bank. Maybe some of them will have that 401k, but the large percentage of the public is probably just spending their money, or they don't have any money in the beginning to be saving. Regardless, he's referring to these excesses that don't exist today, and that's unfortunate because we've been covering that quite extensively here. This is an article here that I'm not going to get into. Essentially, what we're looking at is the food banks and how desperate many people are today for basic services, whether it's food or anything else. It's just hard, to look at when you see how many people are suffering. At the same time, you see these big businesses that get the bailouts, and it just doesn't make sense. This article here is talking about Spain, and apparently the Spanish government is working to roll out universal basic income as soon as possible. We were expecting this to happen in different places in the world, and perhaps this will be one country that decides to go full force into it. I'll try to give you an update on that as soon as I can. This is some information from Morgan Stanley, and I just wanted to show you something really quickly here. As we have discussed in previous videos, the general consensus, whether you look at Morgan Stanley, Bank of America, Goldman Sachs, JP, doesn't matter. They all expect a massive contraction, and then they see this huge surge going back up. So numbers vary regardless. This is generally the consensus, okay? But what I found funny was that they somehow, I don't know how they got to these numbers, but somehow they believe that the GDP after that resurgence, the GDP is going to be anywhere between 5.7 to 4.0. And when have you seen growth at this level? I mean, it's ridiculous. Now, if you look back in the pages of history, there were times in which we had this growth, 5.7 to 4.0, but not in the last few years. That has not been present at all. And you see the same type of thing all around the developed nations, I should say. That's not happening today. You don't get this type of growth in most places. We expect profits to roughly halve this year. How are they going to be able to deal with a halving of their profits when they were already in trouble in the first place? The stats are here if you want to check them out. Take a look. Left-hand side, economic growth likely should contract more than in 2009. More than 2009. Unbelievable what we have to deal with, because if these corporations don't get those bailouts they desire in the next round, there's going to be some heck to pay. I don't think they're going to be able to necessarily keep all their employees. Maybe they're going to have to do something drastic. We'll see. Earnings should experience the largest annual profit decline of its history. This is part of their Goldman Sachs forecasts, but essentially what I wanted to show you is that we're seeing some extremes, and not in a good way for a lot of people. And why is this happening? Well, just like we saw leading up into 2020, there were extremes and excesses there, all kinds. So we can expect a reversion to the mean. Earnings unlikely to return to previous peaks until 2023. And they weren't looking good before. They were basically stagnant for a while, and now they're suggesting that it's going to take years to get back to those levels. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. Just click one button before you leave. Thank you very much. If you want content from me on Instagram, on Twitter, I do unique things on there that you should definitely be checking out. You could find me at The Money GPS. There's been a huge surge of people joining my e-course because right now they're realizing that there should be a way to sell online during this time frame, because there's clearly a need for that. If you want to join, it's completely free, theamazongps.com. The financial system is rigged, we know that, and everybody, deep down, they seem to understand it, but they don't know all the ins and outs. Well, that's what these two books do. They give you what you need to know. Check them out at the link in the description if you want the audiobook, themoneygps.com. This was a quick video that I did that I believe will be informative to you. I didn't get into this data on the current video. I wanted to do a separate video regarding it, so definitely check it out. I'll see you there.